Hello, thanks for joining our webinar. Today we're going to talk about how to gain control of your cash flow without increasing your out-of-pocket expenses. Can you please use the chat box to let us know where you're logging in from? I see that there's some people still joining us. Hello, Boston, Massachusetts, welcome. Syracuse, New York, Olathe, Kansas, thanks for joining our webinar. Before we get started, make sure you grab a pen and piece of paper. You're going to get a lot of great content, and I'm sure you're going to want to take some notes. Along the way, folks, also, if you have any questions, use the chat box. Now, this is for you. If you're struggling to keep up, you can never seem to get ahead. Now, you make more income and you have a fairly good lifestyle. You try to live within your means, but life just has a way of keep happening. And the big problem is you have no access to capital. You want to have enough money to live on. You might fear that you're a little too far gone. It might be too late. And let's face it, you've done things by the book, but you keep falling further and further behind. And, you have the same struggles as most folks. You're paying for cars, maybe braces for the children. You're putting money away for college. Or maybe you're taking care of your parents. You want to expand your business, or you're in the process of expanding your business. Your house needs to be remodeled. I mean, let's face it, there's a constant demand on our capital and on our cash flow. Now, what would your life look like if you're able to keep 30% more of your after-tax income? Try to take a second to think what that would look like. And why I say that is because the average American is spending 34.5 cents of their after-tax dollars on interest alone. Now, there might be some folks out there who say, well, I don't pay interest. We don't use credit cards. We don't buy cars on time. We paid off the mortgage, etc., etc. Well, what you're not taking into consideration is the fact that you're giving up interest in the form of lost opportunity by paying cash for these things. So it's almost, and I don't want to put you in that situation, but it's almost like you're damned if you do and damned if you don't. 34.5 cents of every after-tax dollar on interest is a big number. That's over 1/3 of your after-tax cash flow that you will never see again. Now, also think of what life would look like if you were able to regain control of 30% of your after-tax cash flow. Imagine the impact that would have on your lifestyle. Imagine the impact that would have on your savings habits, your retirement income, perhaps your business if you own a business. That would have an absolute positive impact, wouldn't you agree? Now, in the next hour, I'm going to show you why control is the root of your cash flow problems. We're going to show you some techniques to gain or regain control of your cash flow. We're going to show you how to take positive action today to start building towards your goals today. We're going to show you how to break the cycle of earn, spend, and then save what's left. We're going to give you some insights to avoid the slippery slope of losing the ground that you gained and ending up where you started when life seems to happen again. Now, of course, the financial system scares you. And let's face it, ladies and gentlemen, it should. Think about this. You don't know how the system works, you don't know the rules, and you're expected to trust everything you've worked for to the system. So what makes this different? Well, initially, there's nothing for sale. I would say that's a big difference. But also, our goal here is to improve lives, to help people make better financial decisions about their cash flow. Our objective is to bring truth and understanding to the choices that you make on a daily basis. This is just good, helpful content that has effectively saved our clients hundreds of thousands of dollars in taxes, interest, and opportunity costs. So I have a question. Did you start off putting money away and you're finding it harder and harder to save and to make money on your money? Post your answer in the chat box. Are you struggling to find solutions? Are you tired of watching your retirement savings go up and down like a yo-yo? Are you tired of advisors telling you that you have to stay in the market even though you know everything's going to hell in a handbasket? And then you have other people telling you that, maybe it's time to get out. Are you looking for solutions that perhaps aren't there? And are you frustrated that you can't fix the problem yourself? Are you overwhelmed with fear about making things worse by making the wrong decisions? So you end up with basically a situation where you don't make any decisions. Again, are you damned if you do and damned if you don't? If you related to any of this, I have great news for you. None of this is the real problem. The problem is you haven't learned the 4 financial insights that I'm going to share with you today. These financial insights will help you structure a plan to tackle what is most important to you, those issues that are the main problems. Well, who am I and how am I qualified to help you? I'm Tim Yurek, and over 30 years, I've worked with hundreds of individuals and families, businesses, to help them regain control of their cash flow, grow their wealth, and achieve their goals. My specialty is designing custom-tailored plans for my clients. It shows them how to rebuild cash flow models from the ground up and save thousands of dollars in taxes, interest, and opportunity costs. I align strategies with your goals to maximize the efficiency of your cash flow with an eye towards maximum control. And in the process, we work to eliminate risks. Well, my story is I started off doing things by the book. I had good income. I was putting a ton of money into a 401k. I was paying down my debt. In fact, I refinanced from a 30-year mortgage to a 15-year mortgage. And in the process, because all my cash flow and my cash was in the form of home equity and retirement plans, every time I needed to buy something, I had to go and finance it. Again, I had good cash flow, but it was all dedicated towards debt repayment. My big problem was I had no access to cash. And I'm thinking that a lot of folks on this webinar today are feeling the same struggles and are feeling the same pinch. Now, experience taught me that when you give up control of your cash flow and your money to others, you lose and they win. When I came across these insights, I wanted to learn more. I began to research more, and I began to apply these processes for myself. Within 1 year's time, I was no longer working to pay my creditors. I was working to build capital and wealth for myself and my business. So let's talk about the 4 financial insights. You know, the old way, and we have 4 expenses here: taxes, cars, debt, tuition. It doesn't matter because a lot of people I know have way more than that. Some people have less, but they make less. So at the end of the day, it really doesn't matter what the old way was, because in essence, the more you made, the more that other people had a call on your cash flow. People have a way of digging a hole for themselves financially and then spending time and money to fill that hole up. The bottom line is you're giving up control of your cash flow. You're giving up control to the financial world that's out there, the government that's out there, and in essence, you're out of control. In essence, you're working for your creditors. You get up every day and go to work and do what you have to do, run your business, what have you, and you're doing it to pay your creditors. The old way, and this is what I refer to as the triangle of financial doom. You know, conventional wisdom tells you that from the day you start working till the day you retire, you should put as much money as you possibly can into a government-sponsored retirement plan. 401ks, IRAs, Simples, SEPs, max out all of those plans. At the same time, when it comes to buying the things of life, automobiles, college education for our children, homes, vacations, because all of your money is in a retirement plan, and you have no access to that money, because let's face it, the government controls access to that money. Because you have no access to other capital, you have to go to the banks to borrow, to buy cars, to pay for college education, to pay for vacations. And as bad as this situation is, it's even worse, because down the line when you go to retire, you have no idea what it's going to cost to get your money. And by that I mean the government decides what the tax rates are. So you're sitting there hoping and trusting you're in a lower tax bracket when you get to retirement. But let's face it, how realistic is it that you're going to be in a lower tax bracket in the future? If you're in a higher tax bracket, you lost on the bet that you were going to be in a lower tax bracket in retirement. You save in government qualified plans, you're forced to borrow from the banks, and then when it comes time to retire, you may be in a higher tax bracket than you currently are. You know, I always tell people, that's why you feel frustrated. You know something's wrong, you really just can't put your finger on it. Well, here's what's wrong. you've given up control of your money. It's an absolute squeeze that your money is trapped in the middle of the government, Wall Street, and the banks. So that's why the feelings of frustration. That's why the feelings of you're never going to get ahead or you can't get ahead. I mean, this is an attack on your cash flow. And every day, the attack continues. Now, let's look at the new way. The new way is you're still making these expenditures. You still have a need for automobiles. You still have to pay taxes. You still have to pay tuition. You still have to pay for vacations. But the new way is a different method of paying for these expenditures. No longer will you be in debt. No longer will you be giving up your cash. And we can show you that in this process, you will be in control of the payment process. The new way is you reaching your goals instead of you being frustrated. So if you can, go to the chat box and let us know some of the current strategies that you're currently using where you're giving up control of your cash flow. Well, here's one. Paying cash. Exactly. Maximizing money in retirement accounts. Another one. Using credit cards and having credit card balances. Exactly. Let's face it, if you pay $1 in interest that you didn't have to pay, you don't only lose that interest dollar, you lose what that interest could have earned for you, and you lose that for the rest of your life. It's known as opportunity cost. This takes us to our first financial insight. And the first financial insight is don't play the game unless you know the rules. And, as far as the 401k or retirement plans are concerned, who makes the rules? You or the government? If I said to you, hey, I have a great business proposition, and I gave you this business plan, and the business plan said this. Number one, you're going to put up all the money. Number two, I'm going to tell you how much of the business you own and how much of the business I own. And number three, you're going to take all the risk. Now, if I put that business plan in front of you, would you sign it? Well, in essence, what I just described to you is a government-qualified 401k or an IRA or a SEP or a simple. Think about it. You put up all the money, you take all the risk, you pay all the fees, and the government decides how much you get to keep and how much they get to keep. How fair is that? You wouldn't sign that contract if I put it in front of you, but yet people sign up for this every single day. They don't think twice about the consequences of their actions to getting into these retirement plans. But here's the big problem. The government has a spending problem, and retirement plans are the solution to their problem. There's $17.3 trillion in debt right now, plus another $100 trillion of unfunded liabilities with Social Security and Medicare. So let's be realistic about this. With this type of a spending problem that our government has in both funded and unfunded liabilities, use the chat box if you think that taxes will be higher or lower in the future. Well, I'm seeing a lot of higher, but not many lower. And I guess the few that did say lower have more trust and faith in the government than we do. Again, don't play the game unless you know the rules. What happens when you max out your 401k or your IRA contributions? Well, now you get a tax deduction. But what does that really mean? Well, what it means is you don't pay tax today, but you do pay tax tomorrow. The problem is nobody knows what that tax rate will be in the future. And by the way, the government doesn't even know what that will be. So you have no idea how much of your money will be left after you actually paid the taxes. That's the problem. You don't know the rules, but yet you play the game. The alternative is you contribute to your retirement plan up to the company match, and anything after the match you put into a specially designed account that has no tax on the growth, tax-deferred growth, and you have an option of getting the money tax-free whenever you need it in the future. So if you think taxes are going up, you may want your contributions to go somewhere else, like maybe a Roth IRA. Again, don't play the game unless you know the rules. The payoff is that you know how much money you're going to have for your goals and how much you can access, and you know this at all times. You know when you could access your money. You're getting the government off of your payroll, getting the government out of your wallet. Eliminate the government rules and their ever-changing regulations on if, when, why, and how you can access your money. Imagine putting your money into a financial vehicle that is tax efficient and allows you to access capital. No questions asked, no rules, no hoops to jump through. Imagine what that would do for your life as far as reducing stress. So let me give you an example. When I initially implemented this first insight, I was continuing to save the same amount of money that I had been saving prior to making this decision. I was just putting less into my 401k. I was saving more money in the areas that I could access. And when I did access that money, I was, by the way, still earning interest. Even though I used the money, let's say, to buy a car, I was still earning interest as if I hadn't taken that money or I hadn't used it. So my money was becoming more efficient. I was having a greater level of accessibility to that money. And, we're not saying, don't stop buying things. We're just saying there's a better way of doing things. And it all starts with your decision as to where you're going to save your money, where you're going to put your money. So once I learned this insight and applied it for myself, immediately the stress level and the level of frustration went down dramatically. The second insight is to always earn interest. And this is a tough one for people. Think about some of the ways that you give up control and you lose interest. Use the chat box. Here's one, paying cash. And that's true. Think about it. If you spend $1 today, you don't only lose that dollar, you lose what that dollar could have earned for you. That, again, is interest. It's opportunity cost. So we always want our clients to be earning interest. Places that interest is lost, well, first of all, is a savings accounts. Bank savings accounts are paying very little, if any, interest. According to Bankrate, the current rate is 12/100ths of 1%. Think about that, 12/100ths of 1%. Another place is debt. Once you pay debt, that's obviously money. Every splash has a ripple, and the effect that debt has is it prevents you from saving money in the future. Market declines. Whenever the market goes down, you lose that money. You can't compound interest on negative returns, and obviously paying cash. So ladies and gentlemen, if you're not earning interest, you're losing interest. It's as simple as that. So hopefully you're seeing that these insights, the first two at least, are very simple, but I don't think people really give them the attention and the respect that they deserve. And I will tell you that when you implement these insights into your overall financial life, they will have a major impact. The problem is that more money is lost to interest, and that means there's less money that you have to fund your dreams. It's a zero-sum game. The less interest you earn, the less interest you're going to have to fund your dreams. You may have money, again in retirement accounts or home equity, but you can't touch it. So that creates a further dependence upon debt, which means you're giving up your future in order to make purchases today. So basically, the way the financial system works, your money is positioned so that you're putting up all the capital and you're taking all the risk, and yet you get very little of the rewards. This has a way of stifling future growth. So let me give you an example. Let's assume that I had this magic wand, and with this magic wand, if I wave it one time, all the market losses that you had experienced in your lifetime would appear in front of you on your desk or on your kitchen table. Would that be a big pile or a little pile? Now, if I wave that magic wand again, all the money that you've paid in taxes on your investments and your savings over your lifetime would appear in front of you. Would that be a big pile or a little pile? And finally, when I wave the magic wand the third time, all of the interest that you've either paid to financial institutions or have given up in the form of lost opportunity cost over your lifetime would appear in a pile in front of you. Would that be a big pile? Now try to imagine those three piles. You recaptured all of your market losses, you've recaptured all of the taxes, and you recaptured all of the interest that you've paid or given up. Would that be a significant amount of wealth? Would that be an amount of wealth that's worth going after in your personal lives? Use the chat box. Wow, a lot of yeses, and naturally so. As you're imagining these piles of money, please realize that we can't do anything to change the money that you've lost in the past. But the good news is that by implementing these insights, going forward, you can eliminate the cost of market losses. You can eliminate the cost of taxes. You can eliminate the cost of paying interest to banks and credit companies. And by the way, experiencing market losses and paying taxes on the gains on your money is a choice. By that I mean, if you implement these insights, we're going to allow you, or you're going to have the choice as to whether or not you expose your money to market losses. You can choose strategies that eliminate taxes on the growth of your money. Furthermore, these insights can allow you to position your money so that you don't have to pay interest to banks and credit companies for the use of their capital. Also, by implementing these insights, you can continue to earn interest on your money even after you spend it. I'm sure nobody has explained this to you this way, but really what we're talking about is eliminating market losses, eliminating taxes, and eliminating paying interest to others. The alternative, and how can you do this? Well, you've got to save outside of the Wall Street, bank, and big government model. You've got to use a vehicle that's been used by the wealthy to protect and accumulate money in both bear and bull markets alike. And basically, if you're thinking about doing anything on a conventional wisdom perspective, it's probably not a good idea. So imagine what it would be like to always earn interest. The payoff is that your money is safe. You never have to be chasing after old money that you used to have because you've lost it in the market. You'll earn a reasonable rate of return with contractual guarantees on your money. Imagine how much money you can save by escaping the market. Imagine how much money you can save by escaping the banks. Imagine how much money you can save by escaping the government. I mean, let's face it, you earn the money, you go to the bank, you cash your check, the government takes their piece, the banks take their piece, the market takes its piece, and you're lucky if you have any money left over to send your kids to college. You're lucky if you have any money left over to go on a vacation. You're lucky if you have any money left over to buy a new vehicle. So, yeah, it's sort of like a fight for your cash flow. And the great thing about these insights is it puts you back in control of your money. It puts you at the head of the line instead of being the one that's always at the end of the line when everything is gone. Insight number 3, never lose money. Boy, this sounds simple, and if you're following conventional wisdom, it's a heck of a lot easier said than done, is it not, ladies and gentlemen? I mean, you're out there, you're earning money, and then you're trusting it to the financial system, and they're telling you the great cliches. It's not timing the market, it's time in the market. And they're telling you, you got to stay in even during the bad times, and you're watching your money go up and down and up and down. I mean, let's face it. Since January 1st of 2000, the market has averaged a little over 4%, but average returns mean nothing. The fact of the matter is the actual return is about 2.25%. I mean, think about it. Would you knowingly put all of your money at risk for the past 15 years if you knew you were only going to get 2.25%? Well, I don't think a lot of people would do that. And by the way, I have a few comments here in the chat box. Hell no. You're right. You wouldn't have taken all that risk if you knew you were only going to get 2.25%. But the fact of the matter is, people still keep their money there. And that's before taxes. So even though you only got 2.25%, the government's now coming for their share. So, at some point we have to stand up and say, enough is enough. This is why we're feeling frustrated. This is why we're feeling overwhelmed. This is why there's no solution. The game is rigged against us. The system is stacked against us. They're telling us that we have to expect to lose money if you're in the market long enough. I don't believe that. If you understand this insight, never lose money, then it's easy. And there are ways you can do this, but you have to avoid those losses and you have to be diligent in finding places where you can put your money that will avoid those losses. If we're fortunate enough to have less expenses than income, let's face it, we need to put that extra money somewhere. Now, a lot of times people say, okay, well, I'm just going to put money in the bank. Good luck with that. Again, Bankrate tells us that the average savings account is paying 12/100ths of 1%. Are you kidding me? And then if you go to the Wall Street guys, they're telling you, hey, yeah, we can get you 6, 8, 10%. So they'll tell you what you want to hear, but the reality of it is they don't believe any of it. A recent Morningstar study found that of nearly 2,000 mutual fund managers, less than half owned any of the portfolios that they were managing and promoting for their funds. They're not telling you that, that money's at risk 100% of the time. And oh, by the way, there ain't a lot of guys getting 8, 10, 12%. Here's a graph of the S&P 500 from 1998 to 2015. Let's say you gave money to a stockbroker or an advisor back in 98, and let's say it was $100,000. Well, at the end of the first 2 years, you're up to over $136,000. You're feeling pretty good about your guy. Maybe your gut's telling you that you should take some chips off the table, maybe taking some of those profits and putting them away. So you call your broker and you say, hey, I'm starting to get a little uneasy. We've done very well the past 2 years. Maybe we should take some money off the table. Your broker says, not now. This market's running away, and I'd hate to see you lose out. Well, unfortunately, you listen to them. And lo and behold, in that third year, you lose almost $37,000. You're under what you started with. You're too embarrassed to call him because you knew that that was the right thing to do, which was to get out of the market. And let's face it, he knows retrospectively that that was the right thing to do. But you hang in there another year, and now you lose another $22,000. So now you can't take it anymore. You call your broker and you say, listen, at this rate, I'm going to be broke in 5 years. Sell everything. And he says, not now. The market's down. Those losses on your statement, they're not real losses. They're paper losses. Are you kidding me? Paper losses? At the end of the day, if you cashed out, you would only have $78,000. Well, fortunately for you, you listened to him this time, and for the next 5 years, your account goes up. And now you're up over $146,000. And, how many people out there think you're making money? At this point, you're not making money. You're chasing after old money that you used to have. And now the financial crisis hits, and the market takes that away again. And here's the deal. After 11 years, your account's a little over $100,000, $100,779. So you've been in the market 11 years and you made $779. They tell you that the more risk you take, the more reward. Is that the reward you get for having all your money at risk for 11 years? I hope to God that the rewards are better than that. But that's the way this system is set up. Ladies and gentlemen, we can't win. And the system is set up for us not to win. That's why you're frustrated. Think about this. In this whole process, whether the account was up or the account was down, your broker made a fee. So he makes money on the upside, he makes money on the downside, you lose. They tell you buy low and sell high. Well, think of this. You bought in at $100,000, it went up to $136,000. You called him and said, hey, my gut's telling me to get out of the market. Not now. So you don't sell at $137,000. And then finally you couldn't take it anymore, and you called them and said, hey, I want to sell. Not now. Well, ladies and gentlemen, if you don't sell at $137,000 and you don't sell at $78,000 at the low, when the heck do you sell? Here's the answer to that question. The answer is their job is to get you in the market and to keep you in the market. As simple as that. Because you see, they can't charge you a fee if you're not in the market. So once you're in, as far as they're concerned, you're in for life. Never lose money. The problems are that, number one, you have no control of whether the market goes up or down. And by the way, your broker doesn't know when the market's going up or down either. Fees are deducted whether you make money or lose money. And oftentimes, those fees are hidden, meaning that the fees are taken out behind the scenes. You never even see the money coming out of your account. Taxes are going to need to be paid either annually, if it's a non-retirement account, or at the time of withdrawal, if it is a retirement account. And understand that money needs to be in the account at all times in order for your money to grow. That's what they're going to tell you, but the history is that your money hasn't been growing. And guess what? There's no guarantees that you're going to walk away with more money than what you started with. So again, why would you take all that risk knowing that there's very little reward anyway? Let's look at how ignoring this insight can create problems for you financially. We saw in the second point that fees are deducted whether you make money or lose money. So, in essence, your money is working to pay the advisor or to pay the financial institution to manage your money. And then, on the third point, taxes need to be paid. So your money is further working for the government to make sure that the government gets paid. So how is this money, your money, helping you and your family when you're working to pay fees and you're working to pay taxes? And again, as I said earlier, it's a zero-sum game. The more you pay in fees and the more you pay in taxes, that's less money that you have to solve your problems. That's less money that you have to achieve your goals. That's less money that you have access to for yourself and your family. Furthermore, if you need this money, you can't touch it. The alternative is that you use a process that includes guaranteed gains, guaranteed access to your money, and grows tax deferred. Imagine if your money was allowed to grow tax deferred, even after it was spent. Imagine never having to worry about how the stock market performance is going to change your future. Never having to worry that one more market decline is going to derail your retirement. How would you feel if that was the situation, that you never had to worry about what effect the market was going to have on your retirement account? Let's look at this situation. If your broker doesn't know when the market is going up or down, and you don't know when the market is going up or down, who's in control? Well, here's the hint. It's not you. But let's face it. The broker makes money on the upside. The broker makes money when the account's down. So he's basically in control. He's controlling your money. And he has a vested interest in keeping you in the market, because he gets to continue to charge you fees on that money. Just imagine the feeling of liberty that you would receive by not having the investment world, the Wall Street world, preying on your money and using it to pay fees. Imagine the control that you'll regain over your money that you don't have now because it's in the market. Imagine the worry that you won't have because your money's not in the market. I mean, these are really liberating feelings, and what we see is people, it just makes your life that much more calm and gives you that much more level of confidence and control. Why? Because you're not subject to the ups and downs and the whims of Wall Street. You know that you can retire on your own terms. You know exactly how your children are going to be able to go to college. By regaining control of your money and unplugging from the Wall Street model, these are all areas that you will regain control of and have confidence and certainty about in your life, just by implementing this insight and not losing money. At the end of the day, it's going to have a dramatic effect, not only on your money, not only on your retirement, but also psychologically. It puts you back in control. This brings us to our final insight. Keep your money liquid. So you may have money in the form of retirement accounts. You may have money in the form of real estate equity or home equity. You may be earning a good income. But, it's not a matter of accumulating points on a scoreboard. The reality of how the game is played is that it really boils down to how much of that money can you get your hands on today if you needed it to bail yourself out of a problem today. It's all about access. It's all about liquidity. It's all about how much of that money you truly control. Let's face it, you have money, but right now you may not have access to that money. You earn a good income, but the money is already spent going to debt. So what's holding you back? Use the chat box to indicate what's holding you back from reaching your financial goals. So what's holding you back? Is it a home equity loan? Do you have excessive amount of home equity? Is it a retirement plan? Is that what's holding you back because you're maxing out your retirement plan? Are you paying cash for purchases? The result is that right now where your money is, if you want to get your money, you need to ask other people for permission. You got to go to your human resource director, or you got to go to the IRS rules and figure out if they'll allow you to get into your retirement account. You have to go to the bank to tap into your home equity. I mean, think about it. It's your money, it's your equity, theoretically, but everybody else has the key, or you have to go through so many other gatekeepers in order to get your money. Why would you subject your wealth and your equity to areas where you don't control it? They're the questions that I try to pose to people, because the fact of the matter is, these are the things that are holding you back. These are the things that prevent us from reaching our full potential financially. You know, the conventional wisdom solution is, hey, if I need money, I could just tap into my home equity line. Well, listen, that's true, but what people forget, you know, when the financial crisis hit in 2008, the bank could and did call in those loans. Now, again, this happened in 2008 in the credit crisis, and to a smaller degree, it's happening today. And people had to come up with the money in 30 to 45 days, some give you as much as 60 days. But if you don't have access to capital, that's a lot of money to come up with in a very short period of time. Think about what would happen if the bank called in your home equity line today. Where would you get the money? How would that affect your lifestyle? How would that impact your retirement? These are all the questions that we help people answer and put them in a position where they'll never have to answer that question. The alternative is to position yourself so you make the calls, so you have access to money, so that you control the terms and conditions of how you use your money, when you use your money, and how fast the money gets put back. The payoff is, imagine the freedom that would come with knowing that you can access your money on demand, no questions asked, whenever you need it. Again, not having liquidity or access to your money really creates problems for people who are, let's say, trying to expand your business. If you try to expand your business and you do it on a credit line, and again, the bank calls in the credit line, how are you going to pay that credit line? Where are you going to come up with the money? If you needed to borrow to expand your business, what if the expansion didn't work, or it didn't pay off, or it's a long-term project that will take a while to break even? How do you justify coming up with that money if you didn't have it in the first place? Here's another situation. I have these people that we met. They have 3 children. They've paid for each child to go to college. They've had to borrow each year to pay for each child's tuition. Their youngest child is a junior in college, and they cannot get another loan. In fact, they have an 11-year-old car, and they can't afford to get a new car because they can't qualify for one more loan. No bank will loan them money. Their credit cards have been frozen. They have absolutely no access to capital. Oh, by the way, he has over $500,000 in a retirement account. So they look like they have money, but the fact of the matter is they can't access it. He's working overtime in order to make enough money to pay their debt service. Again, this just underscores the problem of not having liquidity, not having access to capital, and creating loans that more or less wallpaper you into a corner. Let's key on that retirement money. He has over $500,000 in a retirement account. It's absolutely useless for him right now. He can't access that for the things that he needs to access it for, which is college tuition. The government dictates when he can get that money, how he can get that money, and let's face it, even if he were to get his hands on that money today, he'd have to pay tax and a penalty because he's only 55 years old. So at the end of the day, again, Does he have money? On paper, it looks like he does, but the reality of it is he doesn't have any access to that money. So these people are in a really, really difficult financial situation. And, it's not like they spent it on a good time. They did all the right things. They did it to educate their children. Well, not having access to money has really created a huge problem for them. Here's another situation with that same couple. Their home equity line of credit is maxed out. If the bank calls that loan, and let's face it, based on their current financial situation, the bank has every right to do that. Where are they going to get the money to satisfy that loan? It is a very difficult situation for these folks. But again, it all arises from not adhering to the 4 financial insights that I've underscored in this webinar. The ability to access your money when you need it is the most important insight, because life happens. And when life happens, if you're not able to access your money when you need it, you are out of control. And if you have no access to money, you are now at the mercy of the banker and now must do things on the banker's terms, under the banker's conditions, and undergo the banker's process. If your money isn't liquid and if your money is not accessible, then you're never going to be in control. You're never going to be able to react to the issues that happen in your life. You're never going to be able to control those issues because you had access to capital when you needed it. Let me give you an example. We set up a plan for a family, and this past summer, their oldest son was getting ready to go to college. And it was at that point that the parents realized that the vehicle he had was not the safest from their perspective. They didn't get a feeling of confidence knowing that he was going to have this vehicle and he was going to be 4 hours away from where they lived. Their thinking was, what if the car breaks down? They're 4 hours away. They can't solve the problem for him. They were thinking, what if he's driving home for Thanksgiving and there's bad weather? They wouldn't feel secure that this car was going to perform in snow or ice. So they said to me, Tim, we need to get Nick a better car, one that gives us more confidence that if something were to happen or if the weather was bad, the car wouldn't break down or the car would perform well. They threw another variable at me, which was, we want to buy him a car, but we don't want to increase our monthly payments. So we went back to their plan and saw that they had adequate cash and liquidity. They had adequate access to their money, and they were already paying money back to their plan, so they didn't want to increase their out-of-pocket outlay. So I felt relieved for them because the plan that we had set up allowed for maximum access, maximum liquidity, and they were able to buy their son a newer vehicle, one that gave them confidence that it would perform in weather, and that gave them a level of confidence knowing that he's 4 hours away and his vehicle was a safe, secure vehicle. Their plan allowed for this, and at the end of the day, look at the level of security and confidence that they received knowing that their son was going to have a reliable vehicle 4 hours away from where they live. And they had the added relief knowing that this did not increase their monthly expenses. It's just going to take a little bit longer for them to get the money back into the plan, but at the end of the day, because they had access to capital, they set it up on their terms, under their conditions, and on their process. They didn't have to go hat in hand and beg for permission to use the bank's money. They had access to their money was liquid, and they were able to solve their problems on their terms. Isn't that something that everybody should have? Isn't that something that perhaps you would want in your plan? These are the things that we can solve and the issues that we could address because we're following these insights. They didn't have to make any application. It didn't impinge on their credit score in any way, shape, or form. The money that they accessed was not taxed. They didn't pay any penalties to get that money. And most importantly, we restructured their cash flow so that there was no out-of-pocket cost from their cash flow perspective. In other words, they didn't have to pay an extra penny out of their current cash flow to satisfy the access to this capital. So my point is that if you don't have access to your money, you're out of control. But if you want to be in control, you need to store your money in a place where you have access to it and you can give the orders as to when it's used and how it's used. That's the point of keeping your money liquid. Again, life happens, and instead of being in a position where you're reacting to the events that happen in your life, now you have a process that uniquely positions you to overcome those issues when they happen. And again, I don't know what's going to happen, but I do know that life generally does happen. I mean, we all know of the situations where the washer and the dryer go at the same time as the refrigerator. Things break, or there are demands for cash, or an opportunity comes along that you need to take advantage of. Having access to capital is supremely important. So let's review what we discussed in the past hour. Number one, you learned why control is the root of your cash flow problems. And the strategies that you're currently employing may be causing you to be out of control of your cash flow and not have access to your money. We talked about how you could implement strategies that get control of your cash flow and give it back to you rather than giving it up to the institutions like the banks, Wall Street, or the government. We showed you how to take positive action to start building your goals today, not waiting for times to be right. We showed you how to escape the cycle of earning, spending, and saving what's left. We shared insights on how to avoid the slippery slope of losing the ground you gained and ending up where you started. There's nothing more frustrating than the fact that you're taking advantage of information or knowledge that you have recently learned, and you start implementing it, you start making strides and start making positive changes, and then all of a sudden life happens and you end up back to where you started. We don't ever want you to be in that position. So, get your pen and paper. You're going to want to write these down. Here are the 4 insights that we discussed in the past hour. Number 1, don't play the game unless you know the rules. Number 2, always earn interest. Number 3, never lose money. And number 4, keep your money liquid and accessible. Ladies and gentlemen, this is how you can control your cash flow and multiply your buying power without spending any extra money or working any harder. I hope that this makes sense to you and that you're ready to regain control of your cash flow, that you're ready to regain control of your money, and that, more importantly, you're ready to regain control of your life. If this makes sense to you, now you have a choice to make. Here's how we can help you. You can continue along the path you've currently been traveling and remain frustrated and anxious about the future, or you can meet with me. We've set aside some time in the next week to speak personally with you about how you can apply these strategies to your family or business. The cost is free, but in essence, it's going to be another investment of your time. So who is this for? You must be absolutely 100% ready to change. You need to be tired of the same old, same old. You need to be tired of the status quo. You need to know that your current process and methods aren't working. And you know what? Only you can be the judge of that, and I implore you to be brutally honest with yourself. Is what you're doing really working? Is the Wall Street model really working for you? You must be thoroughly committed to accumulating, safeguarding, and growing your money and reaching your goals no matter what. And I can tell you that if you follow the process we outlined today, you must be disciplined in your process and totally committed to reaching your goals. Because if you're not, then this is not the right fit for you. However, if you are committed, we can help. So why are we doing this? On the call, we're going to dial in on your current situation, we're going to dial in on your goals, and we're going to help you get absolute clarity on how you can reach them. Here's the kicker. With less risk than you're currently taking, and you'll get an exact strategy to make it happen. A step-by-step plan to help you achieve those goals. If you want us to help you, and we think it's a good fit, we may invite you to become one of our new clients that we take on a weekly basis. If we work together, we're going to walk you through this program that's going to be designed to get you to the maximum level of financial freedom, the maximum level of control, and the maximum level of efficiency for your specific situation. This will help you save, protect, and maximize your cash flow and put you on track to achieve your goals, not the goals of your financial advisor, not the goals of the bank, not the goals that the government has for you, your achievable, personal, and specific goals. So, if you're absolutely committed to achieving your goals, then the next step is to get on my calendar. Click below. Just remember that scheduling is on a first-come, first-served basis. I book up quickly, so get on as soon as you can. Let me share a couple questions that I'm seeing in the chat box. The first is, who else is doing this? You know what? And that's a good question. First of all, this process has been around for over 200 years. Historically, I could tell you famous people who have done this. Walt Disney, after being rejected for conventional forms of financing, used this process to acquire property and to build Disneyland. John McCain used this in 2008 for his presidential campaign. J.C. Penney, after the stock market crash in 1929, which led into the Great Depression, he used this process during the Great Depression, as over 9,000 banks in this country were failing, and he had over 1,400 stores across the country. J.C. Penney used this process, which allowed his company to stay afloat as all hell was breaking loose. He used this process as the economic world around him was collapsing. It allowed him to keep his company afloat by supplementing payroll and meeting day-to-day expenses. Ray Kroc, co-founder of the McDonald's franchise. Mr. Kroc didn't take a salary for 8 years. And he used this process to cover the salary of his key employees and also to fund an ad campaign around his newly found mascot, Ronald McDonald. Mr. Kroc used this process to buy him time to figure out how to make money on the McDonald's franchise. So these are just a few famous people who have used it. I can tell you that I've taught this process to hundreds of people over the years, and they use this in their everyday life to send their children to college, to buy property, to remodel their homes, to go on vacation. Basically, they use it for whatever comes up in life. Because of this process and because of these insights, they're able to overcome the things that life throws at them. And instead of reacting from a position of weakness, they're overcoming from a position of strength. Here's another question. Comes from John in the chat box. John says, why haven't I heard of this before? I don't know. But I can tell you that Wall Street doesn't make money from this. The banks don't make money from this. The government doesn't make money from this. Maybe that's why you haven't heard about it. You remember, Wall Street, the government, and banks have that little love triangle, and right in the middle of their love triangle is your money. So when we put this process together, guess what? It's outside that love triangle. That's probably why you haven't heard about it. Wall Street loves to use confusing terms and acronyms such as CDOs or ETFs to make you believe that only they can do what they do. Only they can make you money. They create this aura that what they do is magical and above your capability of understanding. They find it insulting to have to answer your questions or to explain to you what they do. For them, the ideal client is someone who gives them their money and just leaves them alone. They find it offensive that anyone could actually believe that they can make money without Wall Street and their magic. You have to realize that by unplugging from Wall Street, unplugging from the banks, and unplugging from the government and their conventional wisdom models, you have completely eliminated them from your payroll. That's why you haven't heard of these strategies. Think about it. Why would anybody in this love triangle promote anything that would eliminate them from having access to your money? But here's the good news. As I said earlier, this is a zero-sum game. If they lose, you win. Right now, you're losing and they're winning. So the question really becomes, do you want this to change? But again, another good question. So who can do this? Well, let's talk about who can't do this. If you think the Wall Street model is best for you, I can't help you and this won't work for you. If you're happy being dependent on banks for credit and access to capital, this won't work for you and I can't help you. If you think the government model of saving in government-sponsored retirement plans is the best way to go, I can't help you. This process will absolutely work for anyone who is definitely committed to change. And I think that's the first step. You have to look at yourselves and say, is what we're doing really working? And if it isn't, then you may want to take the next step. You're not committing to anything, but you may want to take the next step to find out more. So, what limits are there? Well, first of all, you have to understand that you need to be in this for the long haul. This is not some kind of a strategy that's going to make you money fast. It can change things for you quickly, but it's not going to make you money quickly. It's not a get-rich-quick process or scheme, if you will. Listen, all those things, they generally sound too good to be true, and guess what? They are. There's no doubt about it. So if you're not absolutely committed to changing for the long haul, then that will definitely impact your level of success. And just remember here's what we're talking about. We're going to put together a plan for you within your current cash flow. We're not going to use any more money than you're currently dedicating to your plan. We're going to take less risk than you're currently taking. We're going to give you more money than you're currently on track to have. And we're going to show you how to achieve more benefits for you and your family than you currently have. And if we can do all those things, I always ask people, hey, listen, are you at least hoping I can do it? Do you think that, geez, boy, that would be a good thing? If you can deliver on that, Tim, that would be a great thing. All I'm asking for you to do at this point is to be in my corner and pull for me and say, hey, if you can do that, then I'm interested. You have to be able to be disciplined to pay yourself first. Because let's face it, if you don't pay yourself first, you won't be successful in this process. You know, the days of relying on somebody else for your financial success, a financial advisor, a brokerage firm, what have you, those days are over. They didn't work and they're not going to work because the system, as we discussed earlier today, is built against you. So it's not going to work the way they tell you it's going to work. That's why this process works. Number one, it's outside of the way that they do things. And number two, it puts you in control. That's why it works. So we look forward to helping as many people who want to be helped. But I have an old saying, there's a lot of people out there who are drowning financially, and I'm throwing them a life preserver. And some people just look at it and push it back. And I'm fine with that because I realize I could only help the people who want to be helped. Well, that concludes our webinar. I want to thank you for investing your most valuable asset, your time, here with me today. I hope this information was of value to you, and if you're ready to apply these insights to your specific situation, then I encourage you to sign up for a strategy session so you can gain control of your money and start achieving your goals. Thank you, and make it a great rest of the day.